Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is July 1st, 2012 edition of Market Outlook. So if you like this video and like the text, be sure to sign up to get this every week over at www.marketgauge.com, or if you just want to listen to the videos, you can follow us on our YouTube channel, also MarketGauge.com. So wild ride this week, not the smoothest of action, but certainly interesting. So let's take a look. There's some interesting things developing, and first let's cover NASDAQ 100. So the QQQs, you can see I've put in this channel here from the highs, dropped the parallel, and today's close and the marking of 6 months and end of quarter put us into a bullish phase, unconfirmed. Now, interestingly, NASDAQ did not have really good volume to the upside, was not an accumulation day, and in fact, yesterday was a distribution day. So there's some underlying weakness in NASDAQ relative to some of the other indices. But nonetheless, you can see we are what we would call in a relatively weak bullish phase because the slope of the 50 is still pretty much on the downside. Now, what's interesting is that when we gapped up today on the news about the potential Eurozone crisis being resolved finally, we gapped up and held both the 10, powered through the 50, and basically never really sold off, which often happens with a large gap up. So that's pretty positive action right there. Note that we're not oversold nor overbought on the RSIs. So we're looking for, obviously, a move through this trend line here to the upside. That would really confirm a bullish phase, a couple days close over that 50-day moving average, and this trend line would confirm that. Of course, some more bad news coming out, and a failure of this declining 50 and the 10-day is a very, very critical inflection point. So we want to look at today's lows as or Friday's lows as an important point. Okay, let's move on to the S&P 500. I'm using the cash index. You can see we had the highest close that we've had in almost 2 months on Friday. Now, you can also see that the slope of this 50-day moving average slowly dissipating and flattening out. That's a really positive sign. Look at this massive volume on Friday. So much better action than in NASDAQ, stronger close, powered on a new high over the last couple of months and on good volume. Now also note, not quite oversold or overbought, trading in the upper regions, not really meaningful as a read right here. If we look at the weekly trend, the 200-week moving average, and we repelled that 65-week moving average. So this trend is intact. We almost threatened that 65-week on the sell-off this week, in fact on Thursday, but it held very nicely. And again, we're basically flat to accelerating to the upside. So overall, weekly trends intact. Let's take a look at the monthlies. Monthly trend, we use the 80-month moving average. We're basically smack dab in the middle. You can see we're doing quite nicely on the 80-month, the very long-term moving average, trading above it and looking quite well intact. Let's take a look at some of the market indicators, the market internals. Market internals, we actually, well, a couple things. We started generating a sell signal, moved back through what we would consider the trigger point. So you're back into overbought area but basically in a positive zone. So you can see that this indicator now has reverse direction and is in a positive phase, or a positive read. So that's a distinct improvement as opposed to trading under our critical level after being overbought. We're back now through it. Now, on a shorter term basis, the 10-day advanced declines, again, we try to move under, generating a sell signal several days ago, which actually worked okay until this huge gap up. So in terms of advancing versus declining issues, back again into a overbought reading, but that's positive in a bull market until you start hooking down. The thing that is of concern is that there is no real confirmation in volume. You can see on a 10-day average, we're not getting any real conviction on this upside move. So, I would say overall the look here is positive. We have to be concerned about a hook down because we're in an area that could generate a sell signal, as we are in the upper regions in general on the market internals. Let's take a look at VIX. This is sentiment. You can see the sentiment really was a pretty interesting tell. We're now trading under the 50-day moving average. The 50-day is under the 200. These are both on buy signals. We sort of have worked off that short-term sell signal with irrational exuberance as we traded under the lower end of the Bollinger Band. But right now, that sort of worked itself off, and we're trading still within the band. So, again, with all the volatility in the market, we're still trading what I would consider with positive sentiment, but it is at the lower end of the region that we've traded in quite some time. So again, let's keep an eye on that. Let's keep an eye on this 50-day moving average. And also, if we get a little bit extreme, we stop dropping down into the 15 level, it would be a sign of maybe some irrational exuberance, and that would lead us to start looking at an additional confirmation with the market internal section that we just covered. Okay, let's take a look at bonds, TLTs. We've been looking at this compression zone right up in here, and very important swing point right around the 125 level. What was interesting on Thursday, even before the rally, we were really having trouble getting through this critical resistance level, and sort of paused there, started selling off. It actually started selling off. Bonds started selling off. Rates rising a bit, meaning that the fear factor of people running into U.S. Treasuries was abating even sooner than a little bit earlier than when the market started to take off. And today's or Friday's action, we was still contained by this critical support level. So we're neither oversold nor overbought. Got plenty of room to move either way. But let's watch this critical level around 124.50 to the 125 level, and if we can get through there, we have some support potentially at the 50-day moving average. But this is going to be an interesting tell about the market. Now, what else? We were looking, and we had been focused on some housing stocks. So let's take a look at that, and there's some interesting things going on here. First one, Lennar, one of the 2 or 3 major home builders, and this is a direct play on new housing construction, Toll Brothers and Lennar. And look what happened. This week alone, right, just in a few days, 1, 2, 3, 4, 5. We moved up from 25 to, is it 25? Hold on. 1, 2, 3, 4, 5. Yeah, excuse me. Around the 27 level, all the way up to 31. So you're looking at almost a 12 to 15% move in this home builder. Now, also interesting, notice the level of volume overall, and the volume on Thursday. Massive volume and a breakout to all-time highs. So this particular group of stocks that led the market down in 2006 and 2007 is on new highs. Quite a bit different than the S&P, the Qs, all the major U.S. indices. Now, another thing I want to point out is on the weekly charts. If we go back, you'll see that home building during the midst of the housing boom and the beginnings of that mortgage bubble, basically you can see here we have the 65-week and the 200-week moving average. When we got the death cross in the weekly charts, when they crossed and the market started trading under, it was well in advance of the actual crisis unfolding. And in fact, if you look at it, you can see that the market started turning down and breaking that 65-week moving average and the weekly moving average rolling over as early as the mid part of 2006. So it's an early tell about the overall housing and the economy in general. Now, what's interesting here is you can see we've basically have taken out this year a critical resistance level, and this whole thing is bottoming action. But more important, you can see 200-week moving average moving up, and the 65-week as well. Plus, we're on new yearly highs. This is extremely positive action. And let's go back and also look at even the longer term charts, which are the monthly charts, and you can see a similar story. Look how nicely this 80-month moving average worked on this time series, the monthly charts. So this is pretty interesting because you can see we broke down again early through this 80-month moving average, and only in the last couple of months we've broken through it. This is definitely a positive in the economy. It's also very strange since, you know, we seem to be getting constant news about how the recovery is faltering, but clearly there is a recovery going on, and these housing stocks have been and are a lead indicator. So let's keep an eye on that. This is definitely tradable. I would look to buy on corrections for these two stocks. That's Lennar, and let's take a look at Toll Brothers. Similar story. Now, one thing I also wanted to point out is look at the weekly patterns in terms of volume. You can see that we turned up. We had a really, really nice move just this week alone. Very, very significant move. I don't know, 10, 12, or 15% just in this 1 week. And look at the volume. So you can see on a weekly chart that the volume has really been picking up since the mid part of 2011, and really picking up as we've crossed these longer term averages, and has really sustained. And if we go back to the S&P 500 and go back, you can see that the volume has been dropping. So not only is there good volume accumulation in these housing stocks, it's also going counter to the market in general. I mean, back here in 2005, you can see that 2006, 2007, there was a nice trend up on the monthly volume, right? Nice trend up, and we've been trending now down, and volume has been very, very light. So you can see that there's serious money going into housing stocks at the moment. So anyway, you can see we've entered into unconfirmed bullish phases across the U.S. indices. Housing's definitely leading. So let's keep an eye on those groups. Take a look at those. Keep an eye on the early tell of bonds. See how they're moving, and have a great holiday weekend. And look forward to seeing you next week. Thanks, and bye for now.